What's going on, you guys? Hope you guys had a great Friday and a great week. Today is October 2nd. The stock market closed about 40 minutes ago. And basically what I want to do here is explain to you guys the option strategy that I used this week to make money in the stock market and my whole financial plan for the week coming up. And just like a recap, basically. So before I begin, none of this is financial advice. None of this is a recommendation. This is just me documenting my progress towards my own financial goals using the stock market. If you guys do decide to invest in the stock market, please invest at your own risk. So right here basically is the contract that I bought last week. So last Friday on the 25th, I sold a contract, and that contract basically stated that I will buy 100 shares of TNA at $29 a share. And by agreeing to buy the shares at $29, I got paid $215. So the minute I submitted my order and it got filled, $215 got added to my buying power, and then $2,900 got put into collateral. And the reason why it was $2,900 was because I was going to buy them at $29 per share, and each contract controls 100 shares. So if I go to the options, let's say I pick that same one on the put side. So if you want to agree to buy shares at a certain price, you go to the put side. Let's say, just for the sake of numbers, I pick this one. So basically by picking this contract, I'm saying that I will buy 100 shares at $30 per share by the end of October 9th. And if the share price is below $30, then I will get assigned and I will have to buy 100 shares at $30 per share. The reason why I'll have to buy them at $30 per share is because whoever's selling me those shares will make more money selling it to me at 30 versus if it was at like 29. But if it's above, like how it is right now, then I won't have to buy the shares, and then my $3,000 will get put back into my buying power, and I basically just made a free 80 bucks, a free $79. So that's why this option strategy is so popular, and that's why I'm doing it. So basically that's what this is right here. I have $2,900 of collateral right now, but since the share price is above 32, I won't have to buy the shares at $29 a share, so I'll get this money back into my buying power once the aftermarkets and all that close today. So probably like around 5 or 6 o'clock this afternoon, I should get my full buying power back. And then on Monday, I'm going to do the same thing. So I might pick this exact option, but it's going to be a little cheaper just because of time decay, but we'll see what happens. Basically, I can pick any option I want here. So if I really want to stick to that 29 and I'm like, I don't want to spend any more than $2,900 on this whole option strategy, then I can just stick to this number. The only problem with that is I won't collect as much premium up front. So let's say next week I pick this $3,000 contract, and then the stock market drops and then it's down here, and then I have to buy 100 shares at 30. Then what will happen is I will become the seller of the 100 shares. So instead of buying 100 shares, now I have 100 shares and I'm trying to sell it. So I'm trying to sell it to somebody, and then at that time I can name the price that I want to sell it at. So I can be like, I don't want to sell my shares for anything less than $34 per share. So I will get this contract. I will be selling this contract. Let me make sure I'm selling. So make sure you're paying attention right here. So I'll be selling this contract, and by agreeing to sell my shares at $34, I would be getting paid $89, right? So instead of it being cash as collateral, it'll be 100 shares as collateral. And I get paid $89 right now. Money goes into my buying power. And by the expiration date, let's say that the share price stays below $34, then I get to keep my 100 shares and I got a free $89 out of it. And then the following week, I can do the same thing. I'm just trying to sell my shares and collecting money while I'm trying to sell my shares. And then if the stock price goes above 34 and then I have to sell my shares, I still get to keep this $89, but then I got to sell my shares at 34. So if I bought the shares at $30 a share and then I sell them at $34 a share, I made $400 selling them on top of the money that I made while trying to sell them. You know what I'm saying? That's why this option strategy is so amazing. And then once I get to sell them, then I can just go to the put side and do the same thing all over. So now I'm trying to buy shares at a certain price. Once I have to buy them, then I'm trying to sell them at a certain price. So that's how the wheel works. and that's what I've been doing. This is just one way that I'm using the stock market to generate income. And I've been logging it in, so these are the only two that I have right here since I've started basically documenting it on Excel and on YouTube. So next week I'll be entering more. I did do a credit spread earlier this week on Tuesday. I got $10 for that, and the reason why was because the stock market didn't go above the two prices that I picked. Next week I'll see if I can get into a credit spread. The reason why I only did it once this week and only got $10 out of it was because the market's been so volatile because of all the news that's come out between the presidential debate and the coronavirus, Donald Trump getting the virus, stimulus talks. You know, they still haven't come out with a deal yet, even though it looks promising. So that's causing the market to go up and down a lot. So credit spreads aren't really that great to get into when the market's this crazy. It's better when the stock market's kind of like staying the same. So for that reason, that's basically the only reason why I did this once. And the wheel strategy, you can do that whenever. It doesn't really matter as long as you have the money for it. So here, this is all the money that I made off of these two strategies, which came out to a total of $225 just this week in the stock market. And then following my 60-40 method, following my 60-40 basically profit method, I'm going to be taking $135 out of my portfolio and putting that towards my debt. And then $90 is going to stay in the market that I can use to buy stocks, buy shares. I can use it for an option strategy, a lot of things, you know, or I can just keep it as cash and let my cash save up and just use that as like a savings account. So I can just keep this $90 in my buying power, not touch it, and just let this thing build up. So now I have a savings being built up, and I'm knocking down my debt that much faster. So that's my goal with all of this. Next week, I'll be opening up more options, documenting it all, and basically keep this thing going. You know what I'm saying? So that's where I'm at. If you guys have any questions about any of these strategies or anything at all with the stock market, please leave your comments down below in this video, and I will answer those questions on Monday. Otherwise, hope you guys have a great weekend. Hit me up if you have any questions, and I'll see you guys on Monday. All right, peace.